Billionaire investor David Tepper from Appaloosa Fund is making a big bet on China stocks. He was just talking about it this morning on CNBC, saying, look, he would suggest buying everything relating to Chinese stocks, futures. He's talking about stocks, commodities, everything. And this isn't the first time he's made an everything type of call. He actually previously did a everything call back in 2010 following the Federal Reserve intervention with the markets. He thought everything would go up. It was an amazing call from David Tepper, and arguably the following decade his call worked out. He made a big bet on banks, the preferreds, and he made out like a bandit, cementing his status as a billionaire. And so he's done extremely well over time. So what's he looking at now? Recently, Jerome Powell cut the Federal Reserve rate by 0.5% just last week. This gave China the optionality to loosen as well, because if they're loosening while the US is tightening, it could cause the Chinese currency to weaken, increasing the challenges of potentially inflation in that country. So now that the US is loosening monetary policy, that gives China the cover to do the same. And as David Tepper talked about, that meant bringing out the big guns, including a 1 trillion RMB or yuan stimulus via cutting the reserve requirement from the People's Bank of China. So this is a big deal, as David Tepper said, bringing out the big guns for their economy. And so you've seen a sharp rally across various different Chinese equities over the last few months. It had been trending higher, but then it's a sharp spike higher. And you could see Tencent, Alibaba, JD, some of the three most prominent tech companies in China, all up nearly 50% in the last 6 months. That said, it is important to zoom out a bit, showing that over the last 5 years, it's been a very painful ride, showing huge drawdown. So this might be the beginning of a new multi-year bull market for Chinese stocks. And you can see over the last 5 years, a lot of these names, they're underwater. Alibaba is still down around 40% despite this rip rally over the last few days from a total return perspective. And arguably over the last 5 years, some of these returns just aren't super compelling. But could this be the beginning of something bigger? As you can see with Appaloosa's holdings, Alibaba is his top bet. During this morning's call, he talked about expanding the amount of exposure he would be comfortable with. He would love to have some sort of pullback, so that way he could increase his exposure. And he talked about his limits being around 20 to 25% of his portfolio, which is up from where it previously was, around 10 to 15%. So I'd argue that's a big bet on China. And he's saying, hey, this is potentially the beginning of a long and prolonged rally. And so we'll cover why he might be seeing that in a second. Let's first understand what exactly are some of the bets he's made, because he said everything, but you might be wondering, okay, what exactly are the chips that he's betting on? What is he looking at? So he's saying Alibaba, that's the top position, and he's saying he added to it subsequently PDD, as well as an ETF, a Chinese tech ETF, FXI, it looks like. And so all in, he's talking about now that's going to be near his limit in terms of his betting. I previously did a video on PDD if you're interested. Broadly, my conclusion was this is a super fast growing e-commerce play in China. They also have a global, brand with Temu that's clearly, taking market share and, possibly disrupting some of the dollar stores. And I did video on Dollar General as well. And so my main takeaway with PDD is, given their growth, if you believe their numbers and if you're willing to stomach Chinese stocks, which has its own set of challenges, it wasn't expensive. And that was a few weeks ago. This was after a 30% drop. And so it wouldn't surprise me if PDD did very well over time, given their track record of generating a lot of, generating significant market share. Rapid growth. I previously did own PDD. I made over 100% on it. At one point, it was up a lot. And so I'm looking at this from someone that's sampled with some of these companies in the past. And now I'm looking at a mega super smart bull like David Tepper. And it does make me think, like, okay, what is he considering? What is he thinking about, as he's looking at this? For example, let's think about Alibaba. Why is he buying shares? First of all, in full disclosure, this is not financial advice. Also, recently, Michael This is a subscriber at Unrivaled Investing. He wrote, so far the subscription has paid for itself in 3 months. Looking forward to what the future holds. Check out unrivaledinvesting.com for compelling ideas, and prices, by the way, are going to be going up soon. So now's the time to lock in the favorable rates. And by the way, when you lock it in, you're locked in for the future. So now's the time to lock it in. And each year I plan to raise prices more, largely because I believe the premium service in particular, is well discounted relative to the market prices. Looking at AI Ticker Chat thinks, using the predict feature, that Alibaba has a view aligned with David Tepper, thinking 100 to 200% plus upside potential over time, not really assuming dramatic growth assumptions, 5 to 10%, assuming some margin improvement, but largely some valuation improvement over time. By the way, with AI Ticker Chat now is completely free to use. So just go to AI Ticker Chat. You can talk with any of the companies that we cover, which is the vast majority of US companies. And so you can chat with AI, leveraging it to help you with your analysis process. By the way, we're also going to be upgrading AI Predict, hopefully in the near future, with some really cool, new, impressive AI models. So I'm very excited about where we're going with this. So what's David Tepper seeing with Alibaba? First, cash. They have around 400 billion RMB, around 55 billion US dollars as of the most recent quarter, June 2024, relative, even after the stock has jumped 9% higher today. It's still only around $250 billion market cap. So $55 billion plus in cash, $250 billion market cap. What you're looking at is a company, a behemoth in China, one of the dominant e-commerce platforms, where roughly a fifth is in cash. That is one of the reasons why David Tepper is saying, hey, I sleep well at night, is when I know that this cash is there. Now that's, you might say, well, wait a second, is the cash actually there? Another aspect is that not only is the cash on their balance sheet, but they're generating a lot of free cash flow. And you can see around 156 billion RMB in free cash flow, around 20 billion plus in free cash flow. So once again, not only do you have, let's say, 1/5 in cash, you have, 20 billion versus, the 250 billion market cap. So you're saying, hey, this is roughly a teens type of multiple for this business, even low teens, super low teens, if you adjust for cash, looking at the free cash flow for a dominant e-commerce player in China. So that's a super important data point. So you have lots of cash, low starting valuation. And by the way, their free cash flow includes huge investments that they're making in their international operations, where arguably they're not winning relative to some other players, which I talk about with my subscribers at Unrivaled Investing. And they're also making sizable, loss-making investments in their local services, digital media, and other bets. So free cash flow of $20 billion annually, roughly, plus. So maybe it's closer to $30 billion. When you think about, wait a second, they're still making huge investments across their businesses that are unprofitable. And they're taking their free cash flow and they're returning it to shareholders. You can see $5.8 billion returned during the most recent quarter. $5 billion returned in the prior quarter. This is a huge step up in buybacks. And you could see how the share count has also dropped significantly from around 2.6 billion to around 2.3, 2.4 billion. David Tepper made a super interesting point here. This is something that previously I was a little skeptical on, but he was making a really good point. He was saying that the CCP, which calls the shots, the Chinese Communist Party, they may be encouraging buybacks to help keep capital in China, supporting the yuan by reducing currency outflows and stabilizing its value during economic uncertainty. So if China is going to have money printing stimulus, lowering interest rates, they don't want a flood of capital leaving China. So they're saying, hey, take your capital and instead of any sort of international ventures, hey, just buy back the shares of your companies, ideally listed on the local exchanges. Personally, if I were to consider, buying, whether or not it's the ADRs or the local shares, given U.S.-China relations, I think I'd prefer to buy the local market shares. And that's what I've done in the past. I use Interactive Brokers, so see the link below. So I would buy the Hong Kong shares versus the ADRs, just because in case there was any sort of issue increased friction between U.S.-China relations, and the U.S. says, hey, you can't own these ADRs. I don't think it would come to that. But, it depends on who's president. It depends on what policies are enacted. So that is an important aspect to consider. And then, David Tepper feels fine owning the ADRs, partly because you can convert it into the Hong Kong shares. So to top this off, you also see earlier this year, the co-founders, Jack Ma, Joe Tsai, buying back Alibaba shares for themselves. So they're betting on it. And I think this is the final piece that really can create a multi-year run, potentially, is the fact that now you have this inclusion with the Shanghai Hong Kong exchange, where now you can have the eligible investors in the mainland, so Chinese locals having direct access to investing in these company shares. So previously, if you had, hey, Western investors and they get burnt, the CCP would be fine with it. When you turn it into a local constituency type of issue, and if you have hundreds of millions of Chinese savers putting their money into these companies, and then, by the way, their stocks don't work out, then it turns into a CCP issue. So now it's the alignment has arguably gotten better with these developments. So this is another very favorable point when you think about, these China tech stocks, is now the CCP wants to make sure, hey, their savers are going to get an adequate return over time, especially if they're considering putting it into equities like Alibaba or Tencent or JD. I personally do not have a bet. I don't have a direct bet on any of these companies. What I did a while ago is when the Chinese stocks fell dramatically in a day because there was, this video of a senior leader effectively being kicked out of a Congress. And I was like, oh my gosh, this is terrible. At that point, I had made the conclusion I'm not going to make China a big bet like David Tepper personally, but I did add to I have a bet that's indirectly on China. It actually trades in Europe, and it has a huge stake in a Chinese holding, and it trades at a sizable discount to the publicly traded value of its Chinese holdings. So that was sort of my way of, mentally getting around of okay, if there's a direct issue between China and the US, it's unlikely that these European holdings that, indirectly hold these Chinese stocks would really, get hammered. And so that was how I thought about it. Since then, buying it, that's up over 100%, I believe. At least based on the last purchase, just to be clear. But that's really my only Chinese exposure. It is a top 10 position, but that's my only Chinese exposure. I do look at China, and I asked AI to create the image of a skeptical bull, and then I was like, make it even more skeptical. And that's this bull that you're seeing here. And I think it's fitting because it wasn't that long ago, literally September 3rd, 2021. So just, a couple of years ago, 3 years ago, where, the Chinese tech giants were effectively being coerced into Xi's vision of common prosperity. And so it is important to understand, if you're going to consider making Chinese stocks a part of your own investment journey, that it is quite different than most other markets, and that you can have this type of arm twisting where maybe if profits go above a certain margin or the stocks go up for a certain year, you could have them say, hey, you did so well, it's time for you to, make sure everybody benefits as well. And so that is a development that I don't like, when you that type of uncertainty. And that's part of the reason why I already called out it's never going to be, or at least my plans are not to make this a big part of my journey. I sort of have my one little isolated bet. I'm probably not going to touch it. Just let it sit. I'm not thinking about adding to it. But that's how I'm reflecting on this China bet. But now I've shared my take on why David Tepper is so bullish on it. Low valuations. I mean, PDD was the example of wow, you have incredible growth and you're trading at this not expensive valuation. Yes, this could certainly work out. Alibaba trading at a low teens multiple of free cash flow when you adjust for their sizable cash balance. So looking at these strong competitive positions, then you have the alignment coming in, you have the insider buying, you have the repurchases, and now the CCP might be saying, hey, we encourage you to do these repurchases because we want to make sure, the cash is staying in our country. So I look at this and say, okay, no wonder that he's bullish on it. I don't think it's appropriate for my own personal journey. Would not surprise me if this is a multi-year run. We'll see. Would love to hear your take below in the comments. Thanks so much for tuning into Unrivaled Investing.